Right, time for the latest business news now with Stephen Carroll joining me in the studio. Stephen, good morning to you. We're starting in China, where the country's credit rating has been cut.
The ratings agency Moody's cut China's rating by one notch from AA3 to A1. It made the move over fears of rising debt across the world's second largest economy. The agency expects China's financial strength to diminish in coming years. As a result, the Chinese government has rejected Moody's assessment as inappropriate. Well, for more on this, let's go to Beijing and speak to our correspondent there, Brian Kobzynski. Brian, thanks for being with us. How important is this downgrade for China?
Well, there's two factors. There's the economic side and the political side. Economically, this could create some minor problems for the Chinese economy, like raising costs, for example, for issuing bonds for companies. And in addition, moreover, though, analysts say it might hurt China's overall financial soundness. In particular, both the stock market and the yuan took a bit of a hit this morning from it. So though that may be more of a temporary thing. Perhaps moreover, though, it's more of a political, somewhat of a slap in the face. It's an embarrassment, and it certainly is a loss of face for the Chinese government, especially as they are proclaiming that they're in the midst of these reforms for the economy. In particular, the Chinese Communist Party is now in its countdown to the major Communist Party leadership meeting this fall, which is supposed to be the biggest meeting of Chinese President Xi Jinping's term. And so this is a time where they're looking to present China, and in particular Xi Jinping, as strong, confident, and everything is smooth sailing. So more than anything else, it's more of a face issue, I think, for them, but that at least is the biggest concern.
Moody's highlighted in their assessment that this was all to do with rising debt in the economy. Why is debt such a problem in China?
Well, the roots kind of go back in some ways to the financial crisis in 2008 and 2009. As the rest of the world struggled quite a bit more, Beijing decided to kind of open the spigots and pour in a lot of stimulus into the economy, often in the form of infrastructure, much of which was not especially necessary. And so since then, it has continued to use economic stimulus on and off over the years to kind of help the economy boost it on, especially as growth continues to slow here. So that has been going on, and Moody's said that they think it may continue to happen, thus leading to more debt. In particular, a lot of these state-owned enterprises in China have also, if not became addicted to this spending, certainly they're having trouble being weaned off there, and even the central government would like to kind of ease them off, but are having trouble with that. So overall, it looks like one report was suggesting that China's overall debt level was 256% of GDP, which is not the highest, but certainly up there. So this means greater risks of harm to growth and stability overall. And some people are suggesting that at some points this may need a large government intervention by China. So there are risks.
Okay, Brian Kobzynski, our correspondent, speaking to us there from Beijing. Thank you. Well, let's take a look at how the markets were reacting to that news of a downgrade by Moody's. We've seen Chinese shares fall in trading. The Shanghai Composite trading down a short time ago, about two-thirds, I should say, of 1%, a little bit further, three-quarters, I was right the first time. Hang Seng Hong Kong, we're seeing shares fall as well and trading too. Not such a gloomy picture on the Nikkei in Tokyo or on the Kospi in Seoul, where we are seeing some gains. That's being somewhat linked to what's happening with the oil prices. Rochelle, that's what we're going to talk about next, as I'm going to go and tell you about what's happening with oil. This is oil producers move closer to a deal to extend, I should say, a production cut for another 9 months. Ministers from Algeria and Ecuador are the latest to support the plan. The OPEC oil cartel, along with Russia, agreed last year to cap production in an effort to boost oil prices. They're meeting on Thursday in an effort to prolong that arrangement. On the oil markets, the international benchmark Brent crude is up around 0.25% to over $54 a barrel.
Meanwhile, Stephen, in the US, the White House has unveiled Donald Trump's first budget.
It's a $4.1 trillion plan, which includes massive cuts on spending on social welfare, as well as reduction in taxes. The plan also encompasses the 10% boost in defence spending and $1.6 billion for the wall on the Mexican border. Now, a White House budget is seen as more of a policy wish list than a realistic proposal, but this draft has measures that have surprised even the most conservative of Republicans. Martin Pollard has more.
It's Trump's big 2018 budget. A new foundation for American greatness is its title. It promises to get rid of the country's budget deficit in a decade. But to achieve this, it's banking on GDP growth far exceeding economists' projections. It's also relying on pushing through a brutal $3.6 trillion worth of spending cuts.
The Trump budget takes a sledgehammer to the middle class and to working class Americans, lavishes tax breaks on the wealthy, and imagines all of the deficit problems away with fantasy math. The great irony of the Trump agenda is it hurts many of the people who supported him in the campaign.
There are some winners in this budget. The military, Homeland Security and veterans are all earmarked to get more cash. But there are also many losers, including some set for massive cuts. The Environmental Protection Agency, college students, the disabled and especially the poor. That's because funding for both Medicaid and food stamps would get slashed. But the White House defended its proposals.
We don't have enough money to take care of people, everybody who doesn't need help. So what we try and do is look at these programs, again, through the perspective of the people paying for it.
For these proposals to become a reality, they'll need approval from US lawmakers, including Democrats in the Senate.
Some more of the day's business headlines for you now. The US government is suing Fiat Chrysler, accusing the car maker of using software to cheat emissions tests. The Department of Justice says the Italian-American manufacturer sold SUVs and pickup trucks fitted with so-called defeat devices designed to lower pollution output during tests. Fiat has denied any deliberate attempt to cheat such tests and says it'll defend itself vigorously against the claims. Uber has admitted underpaying its drivers in New York City for over 2 years. The ride-hailing service says it was calculating its commission on each fare based on the overall total rather than the amount after taxes and fees. Uber says it's committed to fixing the mistake that could cost the company over $45 million. The US retailer Target is set to pay another $18 million to settle claims over a data breach in 2013. Hackers made off with credit card numbers and personal data on tens of millions of the company's customers in 2 separate incidents that led to its CEO being ousted. 47 US states will receive payments in this settlement. The breach has already cost Target over $200 million in legal fees and other costs.
Right, finally, Stephen, this is very exciting. The first 5-star hotel has opened in Cuba.
It's the Grand Hotel Manzana. It includes a rooftop infinity pool, 4 bars and a luxury shopping mall. It also carries a price tag of up to $2,500 a night for a luxury suite. The hotel in Havana is jointly owned by the Swiss group Kempinski Hotels and the government-controlled Cuban Gaviota. And to deliver the project on time, the Cuban government have to bring in workers from India. Very unusual, but also it was very unusual to have a luxury hotel in Havana.
Indeed. OK, Stephen, thank you so much for that business update.